Good afternoon, everyone. Welcome to the Daily Commodities Update Show, where we update you guys on price action, as well as what's the most likely scenario the price would be heading into later this week, and the support and resistance levels that you guys can potentially play off of. So we'll be looking at natural gas, gold, and silver, and the US dollar. And if you guys are looking for stock market update videos, take a look at the video right after this one. I'll be recording that in a second. So that would be the S&P 500 QQQ, as well as the 7 mega cap tech stocks: Tesla, Nvidia, Apple, Amazon, Microsoft, Google, and Meta. All right, let's get started with natural gas. So natural gas, we are currently at a big gap down. So now we don't have our bull flags anymore. So we had our potential bull flag here, still being above 0.382 on Friday. But after this gap down, the bull flag is negated, and we are currently testing 0.65, meaning 65% retracement. That's a golden pocket. And because we have retraced over 50% of the bottom of this move, A to B move, we have already retraced over 50%. Now that's going to favor the bears now on the next bounce, that they have a lot of room now to work with, that they can potentially form the daily downtrend, just like they had one right here. Daily downtrend. Because of a big drop, now they have rooms for potential daily downtrends. So are they going to get that? We'll see if they end up pulling that off again. There's still hope for the bulls, as long as we do hold above this prior pivot and then bounced. But we have to break above this prior high to get a daily uptrend to confirm. So because of the size of the pullback, that's going to be less unlikely now, because we have to move 11% to form a daily uptrend. So if we pull back even more, right, let's say we pull back to here and then bounced, right, we'll need like a 14%, right? This becomes less likely scenario. Obviously, if we do bounce, we don't need to go straight out all the way up here. We could bounce and then form a new pivot and then come from a daily uptrend like that. But we'll need more price action to see something like this. You can't just predict that it's going to go like that, right? So currently, it's starting to favor the bears now. So you guys know I always talk about trend changes on the daily time frame, that we want to see them because it's how it acts to support foundations along the way. Because the faster it moves up, like this, like a 50% move up without a trend change, gave it all back. And same thing over here, give it all back, give it all back. And I was talking about this the whole week that we're going up. Are we gonna just give it all back, or are we gonna get some kind of trend changes, right? So that's what I'm still currently watching. And every time we had a move like this, like a big drop, big drop, big drop, same thing, it just fades the whole way when we don't have a trend change. So I want to see bulls hold at least 2.54, right? They hold 2.54 and it's uptrending mirror line at the same time. It means it's higher than this pivot. So this is one initial move. So we come down all the way here, right? Then the most likely scenario, if we come all the way there, will probably be a equilibrium. Equilibrium just means a tightening range. So initial move up, the next move of an equilibrium will always be within the prior move. So this move down is within the prior move. Same thing, the next bounce would be within the prior move. So forming something like that. And then what an equilibrium does, it tightens up the range, and then it will break out of that range with volume and volatility after that. Obviously, right now it's quite a bit early to say that it's going to form, because we're not done popping yet, because we're not literally close low of its day. So when I talk about low of its day or high of its day, when you close around the range, that means there could have been more downside, but the market just ran out of time and market closed. Same thing when we close at high of its day, the market ran out of time, it could have went higher. Obviously, it's not guaranteed that it could have went higher, but that's just the psychology of it behind it. It could have gone lower if we had more hours during this trading time. But we can't say this is the bottom. none of us can like confidently say this is the bottom of the drop because the hourly downtrend is still intact, as well as even the shorter term time frame. The 5 minutes probably still in the downtrend. 5 minute had a slight bounce, barely anything, but yeah. So nothing notable for me at all. As you can see, still a complete downtrend on the hourly. So for short term pairs, 12 EMA will be my guide on the hourly for the momentum. You can see it pretty clear rejection whole way. Another rejection here, another rejection here, another rejection here. So this could be you guys' guide for if you guys are in short on natural gas. If you guys are in like cold or something, KOLD, which is this 2x leverage short. Yeah, and then if it bounces over, you can take your profit or whatever. But it's the short-term guide on the downside momentum because it's still trending down on the hourly. We don't know. We can't say confidently this is the bottom yet of this drop. Obviously, if let's say we come down here to 2.54 and then we bounce and then form a hourly uptrend over here, like a slight hourly uptrend here, then we can more confidently say this could be the bottom of the drop. But as of now, no signs of that yet, so we can't say that this drop is over as of now. Yeah, and if we do bounce, and then we'll likely come up to retest this resistance zone again. This 2.62, 2.66, 2.67 zone, as well as this maroon looking line that's trending down is going to act as resistance as well. But now we'll have to see if bulls can play defense. If we don't get any defense, it's just going to keep going down. So I want to see some defense going from the bulls. At least hold this maroon looking line. See this long trending looking line? Bounce, 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 bounce. And then I want, yeah, definitely hold that for bulls. For bulls, give us some hope that we may form a higher low. Because if it bounces over here, right, come down here, bounces here, this pivot is going to be higher than this pivot. So that's a higher low, meaning this low is higher than the prior low. So that could give us a trend change if we do end up breaking that. But that's a long story because we haven't even bounced yet. So we're not going to be talking about breaking the highs when we haven't even bounced yet. But that's the very first step I want to see from the bulls. Play some defense here in this area. This 2.54 and this maroon looking line will be probably around 2.5. Yeah, play some defense here. I mean, obviously, if we bounce right here, that's even more ideal. But no signs of that yet. So likely scenario is coming down to this zone here to bounce. And then when it bounces, I want to see an hourly trend change back to the bulls. Like that. But as of now, no signs of that yet. So look at the UNG. Same thing. Natural gas gap down. So UNG has similar price action that's gapping down. UNG is getting pretty darn close to breaking its pivot as well. If it breaks below this pivot, its daily uptrend is gone. So, you guys know how I talked about it's being a daily uptrend, like that, pivot set, daily uptrend confirmed with lacking follow through. Because every time we get over this high, this Monday's high right there, we come back and close below it. That was a little bit of red flag there. And we just had a gap down today. So I want to see bulls pretty much play defense right at this spot. Bounce, bounce, rejection. So this is a key level at the 6.63 that I want to see hold. If it breaks that, we're definitely coming down and test this low. Low of this would be 6.63. Yeah. Definitely in the spot. Bulls want to play defense. Otherwise, not a lot of support down the downside. It would just come down to the low of this structure, which is the lowest structure of NG. Zoom into the hourly chart. Let's take a look. Same thing. No signs of bounce yet. Although we did form a higher low here. So see this low? This is the very, very low, right? So this is the bounce. Now this is the pullback, and then we bounced. So this low pivot is higher than this low's pivot. So if this candle or the next one can break above 6.67, this candle is high, that's a hourly uptrend confirm. And we may say, and we may have more confidence to say that this could be the bottom of this drop. As of now, no, can't confidently say that yet until we get some confirmation of more on this price action, because it could just form a 4-hour bear flag and head lower again. So we'll have to take a look tomorrow to see if it does form that bear flag or not, because right now it's still looking like one. Even if we bounce all the way here, it's still in the bear flag territory. And because of its weak bounce, it's still in its bear flag territory as well. Obviously, if we get a strong bounce and confirm the hourly uptrend at the same time, negate the bear flag, then yeah, this could be pretty much say confidently that this was the bottom of the drop. But now, no signs of that yet. Take a look at gold. Gold currently had this quadruple top where you're trying to test to get over this resistance, and it failed. And right now we are back into this mirror looking trend line, which is here. Rejection. This was a break, and then it's a false breakout. Come back into it. So we zoom out. When it's a false breakout, you can zoom out to the longer term time frame. It gets a better look on it. Although this did break out on the weekly, but very slightly you can see the wick is on the upper top. And these diagonal lines, you can draw it any way you want. So it's not as accurate, because if I tweak it a little bit, someone else tweaks it a little bit, is very different. Psychology of the horizontal lines are more definite, because I put a line here horizontally. Someone else would probably put a line here. Most people would put the line there. So that's why those lines on technical analysis work, because you can't really mess up the horizontal resistance and support zones, unless, especially the algos. Algos don't mess up these zones, and we just put these zones as well. That's why the support resistance works. It's not just because it's lines that we put down that it works. It's because the algos and the funds also trade these areas of resistance support as well as the volumes, because of areas like this where there's a lot of candles and levels, there's a lot of volume in one area, right? The more volume in one area means the more people clicked buy or sell button in that particular area. So that area will have more support and resistance. That's how it works. That's just the psychology behind technical analysis and keeping things simple, because if there's more people clicking button in one area, then there's more people bag holding in that area, or there's more people taking profits in that area, right? So there'll be more resistance when it comes up to it. People want to get out, break even, all that kind of things. Yeah, so let's take a look at where gold's going to be. So gold has a daily uptrend here, confirming. So even with this pullback, it's still healthy, as long as it doesn't pull back too much into the prior pivots. Then we lost the trend. As of now, I want to see gold hold pretty much this level right here, because you can see this level right here, a lot of rejections prior, so it means a lot of resistance. So when we come down to it, I want to see act as support. You can see right here as well, the exact same level acted as resistance 4 times, acted as resistance here 5 times. So when we come down to it, this level needs to act as support for gold. I want to see a bounce here. Doesn't mean it needs to bounce all the way up here, but I want to see at least some kind of bounce, some support playing defense, and then we'll get more price action. Then we can give us more details, see if the next bounce is going to be a drop or the next bounce is going to come back up here. Look at the hourly. Yeah, hourly is no signs of bounce yet, 0. at the moment. Close at the absolute low of its day. There's probably a little bit more downside to this zone that I talked about earlier. Here, see if bulls play defense or not. Let's take a look. Dollar ended up being strong, which makes sense. Dollar is a headwind for metals. And today is very inversely correlated. So you can see this big pop on the dollar, which made the metals drop. Gold end up dropping inversely of the dollar. So dollar now is pretty much a breakout. Talk about this one. Work off of this slightly 104 range. And now we can say it will probably test this 105 zone. The next level of stronger resistance for me is around this 105 area. And we'll see if it continues. Close to pretty much high off its day. No signs of slowdown yet. So very good chance it might continue. Are the uptrend still intact? No signs of slowdown yet. And yeah, I'll be watching 105 to see if it breaks. If it breaks 105, then we're looking back up to closer to this 105.6 zone for me. Top of the zone, top of the zone, top of the zone, top of the zone, bottom of the zone, all acting as resistance and supports. 1.5, 105.6 is where I'll be looking at if it can break 105. And bears, I don't see any signs of pullback yet. At this moment, hourly trend still very strong. Momentum. All right, take a look at silver. Silver broken all of its supports because it was acting relative strength down here. It ended up acting as relative weakness here. That's how I talk about the relative weakness and strength. When it hits a resistance, when a relative strength stock hits a strong resistance, it will shift from relative strength to relative weakness. So that's why you can see it's dropping more than gold as of this drop. And we have broken this pivot because this was the daily uptrend pivot. So now silver is back from a daily uptrend into a daily neutral trend. And this next bounce is also going to favor the bears for a downtrend because of the size of this move. You can see how strong this drop was due to dollar popping as well. So close pretty much low of its day while the dollar closed at its high of its day. So it's pretty inverse correlated. And now we need to see silver play some defense here, 23.4 range, this level. Even if it bounces, it's still going to favor the bears on the next drop. So it'll probably bounce here to this level and then drop when the dollar, let's say dollar tests 105 tomorrow, right? And it pulls back. So we get a little bit bounce while the dollar pulls back a little bit. And then dollar consolidates a little bit. Then the dollar moves up, breaks the resistance. Then silver would have the next leg down. We'll see how the dollar trades in the resistance zone tomorrow. See if it can break in the next couple of days or not. We'll get more idea of this. If not, then this will just be a biggest, what do you call it? Descending triangle. Is this? Yeah. You can see this is the triangle bottom. You can see it bounces off here at the zones, but it's getting lower each time it bounces. That's why it's descending. Price every time is lower, it gets weaker and weaker and weaker. Big sideways range. All right. So I want to see silver definitely bounce off of this No. Here was